portion of Fox 43 AM Live is sponsored by Endeavor Private Wealth.
We're back with Chris McGee, Managing Director of Endeavor Private Wealth, for a special pre-Halloween segment on investing and wealth management. Chris, good morning.
Good morning.
So some people say this is the most wonderful time of the fear. The stock market has been moving up and down and seemingly every which way, get it? Witchy way? Fear
right,
here?
right,
Yes,
right.
pun intended. As the month draws to a close this coming Halloween Friday, I wonder what lessons can investors take away from this holiday?
Dane, despite the puns, it's good to be back with you and our viewers. Striking a little fear on Halloween is part of the spirit and the fun of the occasion. However, when investment markets cause stress, uncertainty, and fear, investors can get spooked and make poor financial decisions.
Investors, love it when the market goes up, but it seems there's increasing concern over the sustainability of the current bull market.
The S&P 500 index has set more than 30 record highs this year. And while investors should avoid irrational exuberance that can lead to reckless behavior, they should also take dire economic and market forecasts with a grain of salt. One frequently quoted head of a major U.S. financial institution recently said that he is far more concerned than others about the possibility of a market correction, which could hit any time in the next 6 months to 2 years.
Wow. So what do you think about that?
Well, a market correction is defined as a decline of 10 to 20% in the market from a recent peak. This chart shows the total price return and maximum drawdown of the S&P 500 in each year since 1980. Despite significant intra-year declines, the S&P 500 has finished the majority of years in the positive return area. Market corrections typically occur about once every 1 to 2 years and are just part of the normal market cycle.
So investors need to understand and I guess plan accordingly for volatility, not necessarily try to avoid it altogether.
Well said. Avoiding volatility at all costs could have frightening financial consequences. This chart shows historical returns by holding periods for stocks, bonds, and a 60-40 portfolio of stocks and bonds rebalanced annually over different time periods. The bars show the highest and lowest returns expected during each time period. And now, suppose an investor did something really scary and invested everything in stocks, then recognized a major loss in the market, dropping 37%, and compounding their mistake by selling all their equities. What this chart suggests is that time and diversification could significantly reduce the volatility and fear that investors experience in their pursuit for reasonable long-term gains.
And any other Halloween spirit advice you have for our viewers?
Halloween is full of tales of scary and terrifying creatures from the afterlife. But what's actually really scaring is the potential of not having an estate plan or adequate life insurance coverage to protect your family from the events of something unexpected happening to you. So whether it's Halloween or any other time of the year, I believe investors would be well served by consulting with a trusted financial advisor who can help them mitigate portfolio and non-portfolio risks, whether their planning is coming from out of sight or out of the woodwork.
Well, Chris, just wondering, is the candy you pass out trick-or-treaters as generous as the advice you share with us?
You'll just have to come by in costume and find out for yourself, Dane.
All right, fair enough. Well, Chris, as always, we appreciate your time. Everyone, to learn more about Endeavor Private Wealth, visit EndeavorPW.com.
The preceding portion of Fox 43 AM Live was sponsored by Endeavor Private Wealth.